Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by James Cochrane, a partner at Stace Hammond, who knows everything about crypto, to talk about cryptocurrency.
So this week's podcast, James, I don't know if we've had one more in demand going, when the heck are you guys going to start talking about crypto? And Mikey and I have the same response every time going, we have no idea what's going on, so we're going to wait and find an expert. So we're very lucky to have James with us for the next 3 episodes. James is a disputes resolution partner at Stace Hammond, and then he has almost taught himself about cryptocurrency, like lots of people getting involved, and then it's evolved into quite an interesting story. James, great to have you here today. Maybe can you tell us a little bit about, before we go down the crypto side, tell us a little bit about your legal background.
Thanks, fellas. Great to be here. First time on a podcast, so
welcome.
Very excited.
We'll go easy.
Yeah, go easy, be kind.
Yeah.
So my background, I have in terms of my legal background, I do commercial disputes, and I guess one of the focuses of my practice is finance.
Yep.
And so I have, I guess, been interested in the field of finance because I need to advise my clients on it.
Yeah.
And some of my clients include insolvency practitioners. And I guess coming to crypto, I'm also interested in macroeconomics, and I listen to a lot of podcasts on the topic.
James, you're speaking my language.
We've got Macro Mike over here.
Yeah.
So. Podcasts are hot.
Yeah.
Around, I think about 2016, I bought a house, I was doing a lot of gardening. And
James, this guy.
The orchids are on the arm.
Yeah.
And I just heard them talking more and more about Bitcoin, how it was going to be a really significant, important financial instrument. And then that would have been around, at the time, NZD, around 1,000 Kiwi.
So you bought $100,000 worth and sailed off into the sunset.
That's right. That's why I'm now retired.
Yeah. I don't know if you noticed, Mike, he's still in a suit.
Yeah.
So. I passed. I was just a bit nervous, right? Around that time, I guess there was a perception that, this is still funny internet money. Yeah. It's quite a confusing topic because there's a lot of tech, a lot of jargon, and I guess I had other things on my plate like a mortgage. It was just, not the right time, so I passed, regrettably, big regret. But I guess my interest peaked again in around 2017, and so I was organising speaking events for the New Zealand Credit Finance Institute.
Yep.
And at that time, there was what's called an ICO boom, which was an initial coin offering boom. It was basically like the crypto equivalent of IPOs.
Yeah.
Basically all these new crypto projects starting up, just going absolutely bananas. Everyone's talking when Lambo, to get their Lamborghinis. And I saw this as a topic for the Institute's members that they might be interested in.
Yeah.
And I recall organising a speaker. Basically, it all went over everyone's heads, including my own to some extent. But around that time, I've got a close friend who's a lawyer, a really smart guy. He's been trading domains since we were at high school.
Yeah,
and he was trading crypto, and I said, "Well, can you help me out? I'm interested in this thing, Ethereum." And smart contracts, DeFi, help me get in. And long story short, did a small investment, and very soon after that, I clearly bought the top because the market bottomed out, and it didn't go to zero, but it went quite close.
Yeah.
And
did you buy the dip, James?
I like to buy the dip as much as I can.
Yeah.
One thing about crypto is I guess I look at it like this. If it doesn't feel like you're running into a burning building, then you're probably paying too much.
Yeah, okay.
Just
I love
pause
that.
for a
Yeah,
second. People thinking about
Not
investment
financial advice.
Yeah.
Not professional advice.
Disclaimer, yeah.
Purely education.
And you can contact him at James.
Disclaimer.
Yeah. I think for those who are, because our audience, I think a lot will be probably first-time people trying to educate themselves about cryptocurrencies.
Yep.
That's where most. So the idea of investing, if it's not a burning building, what's the point? It's a pretty scary concept, isn't it?
Yeah, I guess that's a view that I have now.
Yeah.
But it's also a strategy. Right? It's because I recognize that it is a super volatile asset class.
Yeah.
Just like it swings wildly. But I view it as just a small part, or which gets increasingly big when it goes, when it shoots. But it's still just a part of my portfolio.
Yeah.
You've got House and KiwiSaver and Sharesies and S&P 500 tracker and stuff like that. This is just something for me which I recognise is further out on the risk curve.
Yeah.
Yeah.
One of the things my buddy said to me is, you just need to understand that whatever money you spend on this, it could go to zero.
Yeah, and that's really interesting because we do webinars with a number of different companies, and we do an Investing 101 webinar that we ran one yesterday, and I do a segment on crypto there, and essentially my advice is if you're coming to me asking what crypto is, you shouldn't be investing in it.
Yeah.
And the second piece is, be prepared for whatever you put in there. It could go to zero, you could lose the whole thing, and you just need to make sure that you're prepared for that and that is allocated properly within your entire portfolio.
Yeah, I guess coming back to how did I get into it? So 2017, 18, crypto goes through these cycles, typically 4-year cycles.
Yep.
2018, it went right down, crashed. Because new markets tend to go quite parabolic, and then they revert back to the mean.
Yep.
And anyway, so when I really got into it was around March 2020, after we're all in lockdown because of the global pandemic, and I was sitting there thinking, as an insolvency lawyer, I was going, wow, I think I'm going to be busy.
Yeah.
But I was also thinking, what is a way for me to differentiate my practice, my law firm, from others? What is something I'm really, what's my why? What am I passionate about that I think I can be really good at? And I like the macroeconomics, I like the investing, I like finance. I, used to fiddle around, it's probably not a good expression, on my Commodore Amiga 500, my PlayStation.
Yeah.
I was a nerdy little gamer. There's just something about the newness of crypto, the computer side, just appealed to me.
Yeah.
And so I decided I'm just going to buy some Bitcoin.
Yeah, nice.
I'm going to buy a small amount. I'm going to watch it. Basically, I decided, in terms of my portfolio, tiny little allocation. Just understand which wallet I should use to hold it. How do I buy it? Do I go to, I eventually learned that there are places like Easy Crypto, Dacit, where you can buy it. What type of wallet do I want? Do I want a mobile wallet? Or is that too risky because it's online?
Yeah.
Or do I want a cold wallet, which is like a USB device that I keep offline? Anyway, just bought some, watched it, and learned to understand and be comfortable with the volatility. And then I guess once you are interested in it and you do own some, you kind of go down this rabbit hole. I went down. I'm still down it. I haven't come out of it 2.5 years, right?
Yeah.
I basically read every book that I can find on crypto. I watched thousands of hours of YouTube. I bore people and turned their ears to, bloody stumps at dinner parties talking about it. And so I guess that led me into, okay, well, I understand Bitcoin, I understand Ethereum and what's going on there, but then with understanding the tech, how it works, that gave me a bit more confidence to go, I'm going to try out some of these other ones which are what are called lower cap.
Yeah.
Right? So they tend to be newer, not as much money invested in them, arguably more centralized, less decentralized than something like Bitcoin, and so a bit more risky.
Yeah.
You know, we talked about investments going to zero.
Yeah.
The way I think about basically anything other than Bitcoin and Ethereum is that these are like, it's like you're a venture capitalist investor.
Yeah.
And any of these projects are basically tech startups. They could all go to zero. It could just be what's known in crypto as a rug pull.
Yeah.
You know, straight up fraud, really.
Yeah.
They steal your money and then go and do another project.
Yeah, it's funny, right? Because it is almost that mindset of, if I have, let's say I've got a portfolio of 10 of these, sort of small cap long shot coins, and let's say 9 of them go to zero, but one of them pays off. It's like, wow, there it goes. Yeah.
Yeah, I guess I started at a time which was quite convenient because I guess some investors would call it the accumulation phase, where the market is down and people have been scared because of a huge sell-off.
Yeah.
But then they're starting to regain confidence, and I guess I took the same attitude with stocks in 2020. They're going to the central banks just started printing money.
Yeah.
And so because they did that, I figured there's going to be more cash in the system. More of that cash is going to go into riskier assets like crypto. The tech is way more established than it used to be. When it started out, it was I guess it was organized by computer programmers, guys involved in cryptography, anarchists, libertarians. It was used on the Silk Road, which is, dark web to buy guns and drugs and some people might say fun stuff. But and it developed this reputation that it was basically being used for bad. I mean, now there's a lot of analysis that that's actually wrong. It's only used for a tiny fraction of nefarious purposes anyway. That's
a really interesting point too about the development of cryptocurrency, because I think recently with the Russia-Ukraine conflict, there was a lot of worry that people in Russia would start shifting assets into digital assets like Bitcoin, and that's how they're going to circumvent the sanctions that are coming in, when actually in reality what you saw was the majority of it is Ukrainians shifting their assets into Bitcoin and that sort of thing as a sort of a safety net. Because all things considered, if you wanted to hide a large sum of money, Bitcoin's probably not the way to do it.
Correct.
Yeah.
Yeah. I guess we sort of take a step back from that. A really, really good point. And actually, Ukrainian defense has received a lot of money. I think at least 100 million, maybe more.
Yeah.
People donating crypto to help them. So for good purposes. And if you take a step back, as how did it start, and why did it start? It was around the time of the global financial crisis, 2008. There was a person, maybe a group of people, man, woman, no one knows, a pseudonymous person called Satoshi Nakamoto, who came up with a white paper for this peer-to-peer electronic cash. Basically, they wanted something where you could exchange value on the internet like you could cash, right? You have what's called final settlement. I give you the cash, and the trade is done. Prior to that time, on the internet, you had to rely on centralized third parties. You had to trust them that the amounts were being exchanged correctly, right? There was this problem called the double spend problem.
Yeah.
So that's, the situation, you might see it on TradeMe, where someone lists their concert tickets and then, more than one person buys them from the vendor. They turn up, and then there's, two people holding the photocopy of the tickets, and then
Mike doesn't get his Taylor Swift concert.
But actually, straight up, shout out to the guy who sold me those Rugby World Cup final tickets when it was in Auckland. Thanks. Thanks. So I walked back to Kingsland.
Yeah. So basically, Satoshi came up with an idea, and it was an idea that had been developing, right? To create a what's called a distributed ledger. Sorry, stop me if I'm get too technical.
So over the next few episodes, we're also going to be going through a lot of these concepts in more detail. So we're going to be talking about blockchain and the process behind all of it. So if anything doesn't make sense today, make sure to jump on next week and we'll go into the detail as well.
Yeah. But basically, rather than going through a central party to verify that the value of the transaction, the way Bitcoin works is and other cryptos work, is that there is a network of computers that verify that the transactions, have occurred, rather than just one party spread across. It's decentralized, distributed. So what it basically does is, you've had, Matt Harris, he's an accountant. He'll tell you about double entry bookkeeping.
Yeah.
This is essentially like double entry bookkeeping, but spread across a massive network of computers. Okay, when Bitcoin started, you could just download the software onto your computer and start mining, which is a way that you verify the transactions, and the miners who secure the network earn a reward for what they do. Is they basically package this, how I understand it. Not a computer science guy, but they package data into blocks. They package data transactions in a block, send that message to the network. That's verified by the computers in the network, and then they link the new block to the last block with a certain code. It's called a hash.
Yeah.
Right. So it creates this chain, a blockchain, which basically has a transparent history of all the transactions that have ever occurred on that network.
Yeah.
Right. And so it was the first time, you could send money peer-to-peer to someone, and you didn't have to rely on Visa or PayPal saying that the transaction had occurred. You could just get online and you could verify what the network does, these things called confirmations, that the transaction has been successful.
So that's interesting. I mean, the example of the TradeMe and the tickets. How much of it do you think, in terms of the original concept, was around that piece versus decentralizing the banks and removing essentially all middlemen in the future?
Yeah, but bit of both, really. The internet was really, really good at sharing data, but it wasn't really good at creating it didn't have its own money, if you will. And yes, if you think about the timing, 2008, that was very shortly after Lehman Brothers had collapsed. Actually, in the first block, which is called the Genesis block of Bitcoin, there's actually I think it's a title to an article in the Times, which is talking about more money being given to bail out the banks.
Yeah.
Right. So it is a critique on the banking system that, which is I guess quite opaque. It is based on what's called fractional reserve. So to create more money, they only need a little bit of money, and so I guess, this critique on having a system where you couldn't see what was going on, this risk of failure, people, big banks getting bailed out, largely the losses getting socialised. So these people who've been in charge of the banks essentially getting away with it at the cost of the taxpayer. And that was just a new way of doing things. But also, as you know, the idea that it is censorship resistant because all the transactions are largely private, even though it's on a transparent blockchain. You can't see names of parties and things like that, right? It is, you can't confiscate it because it's on the internet, it's on the ledger. So, getting back to your point about Ukraine, there was if you're in a situation where you don't have money, where you can't access your bank account because the bank's been bombed, or that's just
hackers have taken down the website, or any
it's just a practical question. Or if in the case of which happened in 2013 in Cyprus, basically the government and the banks locked their depositors out of the banks because they owed, and so the local Cypriot people couldn't access their money because the government and the banks owed money to foreign creditors, right? So all of a sudden, imagine you've worked your life, you're saving, put your savings away in the bank, and then you're told, no, sorry, you can't access it.
Yeah, it's ours.
Right? So that's the use case. And that's the ability for, I guess, people to transact value and it not necessarily be confiscated, right? If it's done in the way that Bitcoin was intended, then it's probably not going to get confiscated.
Yeah.
If, however, the way that people transact is that there's there are always intermediaries between the online and the physical, and so you have a lot of the ways that people hold their crypto is actually on what are called exchanges or centralized exchanges, like a FTX or a Coinbase or Binance, and these are entities which are run by private companies, which could be subject to sort of government rulemaking.
Yeah, but they're large and reputable, and none of them are under investigation at the moment. So it's fine.
Well, I guess it's the major banks, are constantly getting pinged for breaching anti-money laundering rules and things like that.
It's a really valid point, which I think about, because initially it was around the AML, the compliance, and those sort of things, and Westpac a couple of years ago had some issues with the Philippines and had some pretty big fines. And when there's money and there's the large majority using it for something, and there's a small percentage using it for something really bad. Yeah. We're going to wrap this episode up here in terms of a background in terms of James's history with crypto, how he's got to this point, a very small introduction to the history of cryptocurrency as a whole. Next week, we're going to talk about how the heck does an idea go from that to, what is it, James, 1.8 trillion transactions in terms of cryptocurrency. So we're going to tackle that. We're going to talk about more about the concepts of cryptocurrency, and then we're also going to get into coins in the future as well. So make sure to subscribe, give it a like, give us a review, and we'll catch you again next time.
Cheers.